Now, personally, when I analyze those stocks, so that's what I come up. The quality is 41. It lost a couple points on timeliness because it's not growing this year. We don't expect it. Safety also because it has debt. Okay, even we know it is quite manageable debt. And beta, it's kind of quite volatile company, but at the same time, for us, like it's not volatile in normal circumstances, but it's really volatile when it comes to the approval or not approval of the drug, right? And for, let's say, light-hearted investors, it's probably not the company you need to put money in, because sometimes it can go 20% down or up. We're going to look at this, by the way, in technical analysis in a second, and you will see it. Okay, but from growth trend, fantastic business. Okay, and the management is also good, and they have a vision on the future. Now, from price perspective, what we've done here, I calculated the average high price, which was $379 for the last 5 years, and the lowest price average, which was $237. What the price is right now is $243. So it's just a tiny bit above this lowest average within the last 5 years. Now, then, by the way, average is very average, but we understand that the company increased their sales and they increased their profit. So the company is now not the same company which was 5 years ago. And you can see that average price earning ratio was 20. Oh no, average earnings per share 20. Okay, so it was from 15 to 31, and it's 20. So what I do after that, I just divide them. So I look at the highest price, so 370 divided by 20. So you see, okay, when everything was great, fantastic, how much money people were paying, how much time more, right? So it's 18 times. So if you multiply 20 by 18, you're getting 370. So we kind of assume, okay, fine. So if it happened within the last 5 years, so probably it will happen in the future as well. So in everything, when everything is good and company comes with good news, people will be paying 18 times more than their earnings. Okay, that's kind of our assumption based on the history. And the lowest P ratio was 11. Okay, in average gain. And in average, it means that when company has bad news, something not rosy, something stressful for investors, they pay only 11 times of their earnings. And the earnings which we have right now, $31. Okay, it's already exists, and we know that this year they're planning to have $33 per share. So we know if we multiply 11 by 33, what's the price? $360. So we kind of understand that the company might move within this gap between 360 and $645. So usually we look at like that. So 1/3 of the time is going to be closer to the highest point, and 1/3 of the time is going to be the lowest price, and 1/3 in the middle. Okay, and so of course when it goes closer to the low part, we're buying. When it goes to the highest part, we're selling. That's kind of simple logic. And look at this, what price is now. So we identified that the lowest price is 360, but the current price is 240. So we are actually way below of these fundamental estimates, right? So when we estimate, by the way, Warren Buffett does in a similar way calculations. He also uses another ratios. It's just simplification of P ratio. He also look at price to book ratio, price to cash flow, price to sales ratio, a lot of other ratios he's looking, but this particular ratio is one of the most important. Okay, so the question, guys, the company is undervalued or overvalued? So I presume you understand that at the moment is kind of on a Christmas sale, okay, in the market. Okay, so let's see. By the way, interesting thing. Usually, institutional investors, they don't particularly like companies which not paying dividends. And in this company, 68% is institutional investors. Okay, and we can see some of them quite big companies, well-known companies, and they put quite a lot of money. Premier Cup, Prime Cup management, 10%. Okay, of float. 50 million shares, and Vanguard, different companies here. Okay, so altogether in total 30%. Okay, so it tells us that if those companies, they're buying Biogen, so it's kind of their trust in this company as well. And also, if you look here, you will see that there was a quite big drop in institutional investors since that crisis, when the price started falling. Okay, you can see the sell-off, but the yellow line, this is the insiders. So we can see the amount of insider is growing. So the insiders own more of the shares than previously. Okay, guys, can you put from 0 to 10 how you understand the fundamentals of the company? And then we'll go to technical analysis. Okay, what about other guys? Others guys. Okay, so what else? Right. Let's look at technical. That's what happens with technical. I think everyone wishes to buy it here, right? When it was $3 and even $2.7, and then sell when it was $400, right? And make a fortune, right? Put here $200,000, and here I have what, $4 million or something like that. More, or what kind of 4 million? 10 times, 20 times more, right? So it's 20 times more. So it's fantastic, right? So investment. Now we can see that for the last 3 years, 5 years, right? So it's kind of a side trend. It has a huge growth from 2010 to 2014. Remember, there was some kind of mergers and they were growing very fast. And after that, it's collapsed. And it's kind of sideways going. So, and it moves from $214 to roughly $360. And here it was moving to 400 and what, something like $440 or something like that. Okay. And at the moment, we are closer to this low part. We're not that low yet. Okay, the price didn't touch $2014 mark, but the question is, will it? Because look, yes, 2014 it has that level, 2016 it has this level, and 2019 it has this level. But between that, 1, 2, 3, 4, 5, 6, 7 times, it's stopped around $250 level and then moved all the way up. So we always, as investors, experience this decision-making dilemma, right? Do we buy now or do we wait until it drops lower? Of course, everyone wants to buy at the lowest point, but the question is it going to be lowest point at $214, or is it going to be right here and then it's going to move all the way up? Okay, this is the challenge. And the thing is about value investing is that you cannot be right all the time. Even investors like Warren Buffett, when they buy, the prices drop down. So can you imagine those guys that have 40 years experience on the market and still they cannot, let's say, predict the exact price where you need to buy or sell the stocks. But if you understand the value of the company, if you understand the business, you kind of already know if it is sold in a bargain or not. If you go to supermarket and you see some chocolate on discount with 25% discount, and you love this chocolate and you buy it, but next day you see in another shop the same chocolate, 35% discount, you're not discouraged that you made a mistake and you're not jumping and selling your previous chocolate which you bought. You may be buying even more. So that's what value investors do as well. So the question is, what the price is good? Fundamentally, we know that the price $360 is good. Now, from technical analysis, it seems like it's somewhere between 214 and 250, right? So let's have a look at closer view. You see this huge jump, okay? It jumped here because people believe that FDA will approve that drug. It was like a month ago, so, right? And then next day they announced that it didn't. So and the price just collapsed from $360. It went to 200 and something like $30. It's touched that point. The interesting thing that in 2019, the company for quite a while was moving between level 2014 and 2040. Okay, in this gap, you can see it's kind of sideways trend. Then on the earnings, E means earnings, it jumped up again sideways, and then starts sliding slowly down, like together with the like when February collapse, March collapse on the coronavirus, it's moved up very quickly up again, but now it's kind of sliding down again. Okay, this is because people expecting that drug. So it gives us certain, because people focus on one particular drug and are not paying attention what happens within the company in general. Okay, and the price because of that collapsed too. And specifically that Biogen was, I think it's kind of, if you go online and you find that Biogen is responsible for 300,000 of coronavirus cases. And if you see that it was a conference, and Biogen created a conference, and there were people who were sick with coronavirus, and 20 people in a conference got infected. And then they, like, you know, those guys who calculate the spread, which happens after this 20 people, in total, they calculated that Biogen is responsible for roughly 300,000 cases of coronavirus in the United States and the world. Okay, so something like maybe it's affected the price as well. So that's what we see. Okay, this is red trend, and we kind of slowed down. This is a huge move, but now we are holding this level. Okay, guys, this level, which was a level of resistance last year, at the moment, we're just bouncing out of this level. So the question is, are we going to break through and go down, or are we going to stay above? The question is, if we break, why should we? Last year, the earnings per share were less. This year, the earnings per share is more. So logically, we can assume that the price has to be higher on the stock. So, but emotionally, we don't know how investors are going to react. A lot of technical analysis trader will look at this chart and say, no, definitely it's going to go break through this pattern, go to the bottom of this trend, which is exactly going to be $214. Okay, because if we look here, if it drops here, so roughly it's going to be $210, $215. Okay, so this is technical analysis. If we look here, indicators kind of already moving up. They are in oversold situation. Okay, and the question is what we can expect. Okay, just sorry, different way. So now, guys, I usually ask questions. So will you buy this company at those levels, or will you wait, or will you buy it at all, or not, this company? And if you do decide to buy this company, at what price levels will you buy, and at what price levels you sell? Put two numbers, a price you buy and a price you sell, regardless what strategy you're going to use. We're going to look at option strategies in the future, but first what you need to distinguish is the like amplitude, you know, of movement. So from which level to which level the price going to move. Okay, and after that you already decide which strategy are you going to buy shares and sell shares. You're going to do options, and but first initially you have to identify the levels where you buy and sell. Okay, someone on the person write down. So guys, the main reason for this masterclass is not just to tell you what I'm buying or selling, right? The main reason is to show you the way value investors think. Okay, how you can adapt your own way of thinking about the stock market, and instead of jumping and buying or selling companies which have no values at all, based on speculation, based on use, you kind of become more aware of that you need to analyze businesses in more details. In this particular case, you're not going to ruin and lose your capital, which is very, very important. Okay. Okay, 230, 290 Rohan, 240 and 270 Olga. Okay, Mick, not my style of the company. Okay, anyone else? Okay, other guys are share, right? Okay, so let's have a look what I put here. Now I also put 230 to 140 to buy if you're a long term, and hold. You can hold in 360 and 450. It might take you 2-3 years, but it will give you 90% of profit. But it might take you only 3 months, right? So if FDA approved drug will be launched, that's it. The price will jump to $500, okay, on that particular drug. So you might not wait that long. Now, roll strategy. A roll strategy, when you buy and sell, and you're not doing kind of like a long-term investment, but it's more like a trading style. But I call it value trading. In this particular case, I would probably buy at those particular levels, around 240 bucks, and hold until 265. So just a very short move, right? So something like that. Previous resistance level, previous support. So maybe here it's better to see. So some more of those levels, okay, and I try to sell here because whatever was support, it becomes a resistance. So very easily to expect that it might move there. So it's one of the trades. Or you can trade options. So it's kind of buying here, right? Selling around here, 260. Maybe even low, maybe 255. It depends on my mood, okay? But remember again, so now we look technical analysis of this specific company, and remember that all indexes are high, right? So if the indexes start coming down tonight or tomorrow and all this week, so it's better just to stay and watch, because very often the companies can be pushed down as well. And in this case, it can reach $214 level, and you can buy 10% cheaper, which is amazing, right?